Right, well, it's Friday after the market close. Thank you for joining me. Welcome to our daily market review analysis. We'll be looking for the US dollar pairs today, along with some of the other charts that we normally follow, and in particular, few particular trades that we are trying to stoke for a long position. Okay, so really not much to actually look at in terms of the equity index. It's just basically stuck in that sideways within a very narrow range, so I won't really spend any more time on that. Oil appears to have corrected. Now that could be two things. It could be that we already have this final leg, final wave up. We drew out in a 5 wave, which is what I would have expected, but it looks like maybe either it's over or maybe it's not even started, and maybe what it is that we are currently in a sideways correction also. So for example, if I just draw this little box here, then it may be that we've done wave A and wave B, and maybe now we're going to correct a little bit deeper, and in fact that would have been the sensible thing, but for some reason we didn't get that earlier on. So if it is still if it is actually going to be correcting, then we will be able to expect another move up later on, which would then synchronize with the equity index, because the equity index currently is also going sideways. So I won't know for sure, but for the time being, what I will do is I will assume that we've done wave 3 here, and we are still possibly correcting. Okay, so we'll come back to that when we have some more data. We won't take any serious view of this one, but maybe it is correcting, and therefore we expect a correction to continue, for example from there to something like that, before resuming the uptrend like that. Okay, so 38% retracement or so. So that would then give us wave 1, wave 2, wave 3 retracement, and then wave 5 to continue up. Come on, what's happening with all this? Okay, let me just sort it a second. Okay, something like that. So we would then continue up higher afterward, but for the time being it looks like maybe we are still in a part of wave 4. The previous one appeared to be too shallow retracement. So equity index going sideways, oil is going sideways, and therefore there is no major direction from that. FTSE 100 index, if I look at that one, then we were suggesting that we've had in this one, from the same low we had a wave 1, wave 2, wave 3, wave 4, and we are in a final leg up, wave 5. So that one is also correcting. Okay, so now that synchronizes also with the US equity, Dow Jones Industrial, for example. So we've gone up in here, which looks like to be let me just check again. So it's 1, 2, 3, 4, and 5. So it's quite possible actually this fifth leg up in FTSE 100 may actually be over, because that is the last leg up. We've got a clear divergence from the RSI, and we seem to have done. So really speaking, now this UK equity index, FTSE 100, is actually well mature, and it appears as though it might have actually done the full 5-wave move. Let me just try and check. So if, for example, take that off, put a new trend line on there. Where shall we put the trend line? We put that trend line here and do that. Then you can see that this was wave 1, wave 2, sorry, wave 1, wave 2, and then wave 3 went over, so that's correct. Come back for wave 4, and this is wave 5. So for the time being, I can't say for certainty, but looks like that this wave might be over, or this is wave 1, wave 2, and then 1, 2, 3, 4, and 5. Okay, so this is what it now looks like. Okay, so what we're going to do is this from there to here is a larger degree wave 1, and then we've got retracement wave 2 like there, and then all of this is wave 3, because from here we got 1, 2, 3, 4, and 5. So that's wave 3. So now we are retracing. So quite possibly what we could have here now is, along with the oil, we'd find a retracement back toward this line, this, and then the final leg up. So it looks like then the US equity index, oil, UK equity index now look as though they are all in the same kind of agreement. Okay, so let's now look at the dollar index. So in the dollar index, we explained yesterday briefly that we are in this kind of a pattern so far until we are proven wrong, and in that pattern we've done wave small a, small b, and small c to become a wave A in double bracket, ABC back down as a small a in a single bracket, wave B in a single bracket, and wave C in a single bracket. So A, B, and C. So that A, B, and C is a flat correction. So in which case now this last leg we are expecting in a 5 wave. So basically from here we'll be expecting 1, 2, 3, 4, and 5 to finish off this. And I think it's difficult to really tell, but we can only make an assumption based on what we see. So over here you can see now that we have a potential double top with the price higher high but double top. This is on the daily chart. So we have possible 1 here, small 2, then 3, 4, and this one here is a 5. So we haven't got a clear divergence in the normal sense, but it's almost double top, and on the price is higher high. If we look at it in a shorter time frame, like 1 hour, then I think what it is so far from here we have wave 1, wave 1, wave 2, wave 3, wave 4, and this wave 5 I think is almost complete. The only reason why this would not be complete is if this area is a flat correction similar to the one we had in the UK equity index. So what I mean to say is that we've got like an ABC zigzag down here as a wave A, then possibly some around ABC as a wave B, and we are now coming down to complete wave C. So that could be possible. Now if that is the case, so if this is the case, and say for example we find that it is a part of the overall wave 4, then it's possible on a Monday we would see this one go up and make a top. Other than that, I think we've got the top. This 1, 2, 3, 4, and 5 is done. This 5, this last one, hasn't quite been as high as we would like to see, so it's fractionally below the wave 3. But sometimes that happens, it becomes what is called wave 5 failure, which doesn't reach the full extent, but it fails to reach the higher high from the previous high. So let me drop down to 15 minutes. You see what I mean is that on this 15 minutes you can see the small 1, small 2. I think this one is a clear small 3, small 4, and possibly small 5. So if I am correct on that, then we may well have topped, and in which case next week we should see dollar starting to sell off. If the dollar starts to sell off, then we will see a run in the equity to the upside, oil to the upside, and all the US dollar pairs to start gaining against the dollar in some proportion, some more than others, of course, but other than that, this one to me looks like it has topped, because when you start looking at very small waves, sometimes they're hidden in the candle and it's a bit difficult. But I think so far on 15 minutes I can see this one as 1 and 2, this one strong up there as a 3, 4 and 5. Now if I look on the RSI, then you can see on the RSI we have, starting from here, small 1, small 2, small 3, small 4 and 5. Now I don't have the divergence from there, but I think you will see a divergence on a 5 minute. You see here on 5 minute chart, so you go 1, 2, 3, 4, and then this one topped out on a 5. Now what will confirm that we have this correct analysis? Well, what will confirm is that if this is done, then we should expect a fairly strong move to the downside. That would confirm that the top is in. If however we don't get such a strong move to the downside, now remember on a Monday US market is closed, so the only market that's going to be influencing the dollar index is UK market. So anything that happens in the Far East and then the UK market, and when the UK market close, then effectively everything will close. So unless we begin to trade sideways while the US market is closed, then we would assume that the top is in, and on Monday we should get, as I say, quite a strong move to the downside, and this minor rising trend line, we should expect that trend line to breach to the downside. So that would then conclude that the upside is over and we are now in the downtrend. But we won't know that until we actually get a break of that and a strong move to the downside. So if we don't get that, then expect sideways correction, which is still possibly wave 4, and then we will expect another leg higher to make the final high on Monday. Even though US market is closed, we might still make another high. So in that case, for example, like a euro in particular, euro and Swissy, because they two together make nearly 72% of the weighting, so they may weaken, and consequently the dollar would top. So we are not completely sure which way it's going to go. My perception is that we have completed, but we need a confirmation of that. Okay, now if we also if the dollar index falls below this pivot, then it's absolutely clear. In fact, I wouldn't even say if we fall, because you've got -1, -2, -3, and if this is all part of 4, then it cannot fall below 80.1. So if the dollar index falls below 80.1, then we have to assume the top is in, and we should be, and in fact it will probably happen quite strongly, because we will start getting, you know, a strong candle move like that, not gingerly moving sideways. Okay, so that's what I'm expecting. We will have to wait until Monday to find out if the dollar has topped, but my feeling is it should have topped, and therefore it start moving down. And if that start moving down, then we will find that UK market and other equity market will start moving up. If this one trades sideways, then we know that there is another leg coming, and we'll check another chart to make sure. Okay, so this is the German DAX. In the German DAX, what we were expecting is we've had similar sort of waves here from November. So in fact, this one started up in June, but November starts off here. So the wave count on this one is very, very difficult, because it doesn't really split into a nice clean wave. So maybe this one is just propagation of the waves we've had before. So maybe that is like a 1, 2, 3, 4 and 5. So that finished up wave A. This expanding wedge is the wave B, and this one is a C. And now we are currently correcting on that one. Okay, so in correction form, we've got wave 1, wave 2, and wave 3, wave 4 and wave 5. So that completed wave A. Then we got A, B and C to the upside. So this one finished off a wave B, and we are trying to currently complete this downside. Now downside doesn't have to come all the way here, it can come simply up to here, previous low. So we can then finish up with the wave A, B and C, for example. Or it can do a normal zigzag where we'd expect that to come down at a further lower level, like so. Okay, so what I'm expecting now is this one doesn't appear to be finished. So if it's not finished, we expect a low to retest the last low and give us a divergence on this, say, 4-hour chart. So on a Monday, I would suspect that the UK market will probably sell off, because that's what we seem to have gathered. Just double check. Yeah, we are expecting UK market to sell off. We're expecting German market also to sell off, so that's harmonizing. We're expecting oil to pull back, so that's also harmonizing. So in which case, I think by process of elimination, I think what will happen is on a Monday we will expect the dollar index possibly to trade sideways to make a move to the upside. So we will form a top possibly on a Monday. Okay, and US market, as we said, will be closed, so there'll be no, movement in a US market. But there is no a clear direction. We're looking at several different things which suggest that the dollar might still go up on a Monday and equity market might come down. Just maybe check one more. This is a Japan in 225, Nikkei 225, and it's not really any clear pattern on that one. It's got a flat here, so either it can break that or it can make another one more high. But the other markets are looking like vulnerable, coming down. So this Nikkei index need to break below the recent daily lows we've had here in the region of 11,000 to suggest that maybe the top is in. I believe the top is in for Nikkei index, and Nikkei index next week should be really looking to come down. Okay, but most of these are, I think, a little bit unclear, so we'll leave it at that. There is a possibility that some of these markets will start correcting next week, and if they correct next week, then the dollar index will go up, and in that case we may even finish up with a situation. So we mustn't completely forget that we may even finish with a situation that the dollar index can go up quite a bit, maybe something like 80.5, 80.6, although I'm not expecting substantial leg to the upside, because if this is the final leg up, then you can already see 1, 2, 3, 4, and we should be really in absolute final. Other than that, I may have the wrong waves. I don't know how else I would label them, but we will have to wait. So until we get a complete direction and we get a turn to confirm that the dollar is topped, we have to be careful to jump to any conclusion about any of the other market also ending their corresponding move to go with the dollar index. Right, so with that said, let us now look at the US dollar pairs. So the first currency we're going to look at is the dollar Swissy. And on dollar Swissy, we were looking for a move to the downside, but remember the dollar index itself is in a flat, meaning it's moving sideways. So here for the dollar Swissy, from the low here in December, we done ABC up and we were coming down. And if I look at that in 4 hour, then possibly this is a bit difficult here to say is actually a full wave, but maybe so I don't think somehow I can label this as a full wave. What I could do is which would look very unusual, to say the least. But what I could do is, say for example we had a wave 1 here, so I can probably put in there a minor 1. I'm trying to see if the Swissy is indicating something. So it's minor 1, and then this rest of it appears to be very overlapping. So I can't say it's a part of a new dimension, new dynamic, or a new impulsive wave to the downside, but this obviously, this part of it is. So how does this tie in? So I think what might be is this could be a running flat, possibly running flat. When I say running flat, I mean like that. It's not something I'm very keen on, but say we had a wave 1, then we had a wave A here, and wave A in fact would be there. So wave 1, then we had A, then all of this here is a wave B. So in other words, we've got coming down here, we got A, B and C. So wave 1, we got A, we got B and we got C. So then this one becomes wave 2. So if it is a running flat, then that's what we would get. So in terms of the wave count, we would say that this is 1, this is 2, let me, from there to here, like so. So we get a running flat. So we get wave 1, and not even there, in fact it would come all the way to there. So if that was wave 1, wave 2, then we expect this to be 3, this 4 and this 5. So that's the only way you could do it somehow. Otherwise I think it's a bit difficult. So if that was a 5 wave down, that's what I'm trying to reason out. If that was a 5 wave down, which is over here, then in that case we got wave 3, A, B and C as wave 4, and that wave 5. So then we get this wave 3 complete. Wave 3 meaning 1, 2 and then all of this here to 3, and we are currently retracing in 4, this 4 here, okay, in which case we should see ABC and we should see something like this sort of area retested again. If I do Fibonacci retracement, then starting from there, just approximately, then we do say 38%, then basically we'll be coming to somewhere about this sort of level. So basically in that case US dollar Swissy could come all the way to there. Okay, so it is currently in an uptrend. If I look at it in a 4-hour chart, then this is basically this is what we are looking at. So if I do that and we remain in there, we probably got A, B, C. Look at the RSI. So based on the RSI, this entire cycle is 1. So we've got A, B and C. So minor A or minor W, A, B and C. So A, B and C. So larger A, B and C, or W, X, Y, X, Z. Okay, so if the dollar is going to continue higher, then it would obviously gain against Swissy. And at the moment, I think I would say label this one as possibly like triple zigzag. So this is like W, X, and Y, and then X again, and then Z. So that's like a triple zigzag. Okay, Z. So if triple zigzag and we have a divergence from the RSI on the 4 hourly, then possibly we may come down and then subsequently make another leg up. So this would overall triple zigzag. So this one then overall becomes, for example, say wave A in bracket. Then we get ABC down. So this becomes wave B in bracket. And then eventually we would see a wave C in bracket. Now somehow that looks different from what we are seeing in the dollar index chart, because in dollar index chart what we were looking for is market possibly to come down, but only very, very small, because remember we were saying that level in there, just check it again. We were saying that dollar index cannot fall really below 80.15, can't fall below 80.15. so if that's correct, then that's only like just a small decline and then go up. Okay, so in which case we would not get that. So in that case, what I'm thinking then is that this is W, X and Y, and then possibly that forms a wave A, then this one forms wave B, and then instead of this being Z, it is a second. So we get W, X and Y to give us A, so that's a double zigzag, then B, and we get another double zigzag up. So we've already got one zigzag W, right? We get a small pullback. So in that case we will broadly speaking stay within the trend channel here. So we get a pullback, and that pullback can be X, and we get another one over here, Y. So we would expect that. And then a market would sell off with the dollar topping out on a Monday. So on a Monday, this is what I'm now seeing with this currency pair, and this backs up with what we're expecting also on a dollar index. If we need a small pullback and then another leg higher to complete the retracement, in which case we wouldn't go as high as that, but we might simply come to somewhere about 92, 92.30, 92.30 or 92.50, sorry, 0.925 or 0.928. Okay, so basically in this area here, that's where we would expect possibly for dollar Swissy. And on the RSI, basically we would remain within the uptrend until we get another push up, and then subsequently we will get a pullback, or rather reversal. Okay, so US dollar Swissie seem to suggest sideways to upside for the dollar, and dollar index, we confirm that is probably what's happening. We want a little bit of pullback or a sideways and then another leg up, and maybe that could complete on a Monday. And usually Mondays and Fridays make a high or the low of the week. So for example, for the dollar closed near the high of the week, and if on a Monday it goes up and forms a high and then sells off, then that will be the high for the week, right? It's not a rule, but just a general observation that often do hold. You know, we notice this sort of feature. So dollar index, I think, should be going up based on the dollar Swissie chart. We'll look at the Aussie dollar. Now the Aussie dollar is currently in a downtrend. The only question remains is how far will it come? At the moment we are gravitating toward somewhere in this area where we had a lot of support previously. We might have another support there for the Aussie dollar to form a bottom in that area. So if on a Monday dollar index makes a top, then Aussie dollar will sell off and probably hold. If you put a Fibonacci on this entire leg, then 38% comes in just there. So 38% or fractionally below that is probably where we are expecting Aussie dollar to form a bottom, somewhere in that area here. So that's the only question. Now, if it's very weak, it might come down all the way to that area, or even 50% retracement. And the 50% retracement Aussie dollar comes in around 1.01 area. But remember, the Aussie dollar is not a part of a dollar index, not the official dollar index. So Aussie dollar can in fact do whatever it wants, not necessarily affecting the performance of the dollar index. So whilst we remain in this downtrend, then the Aussie dollar will continue making lower lows and lower high, like so. Okay, so if I look at that on a 4-hour chart, you can see that we've had I mean, I'm calling this wave 1, but really I don't think it's a wave 1, because there is no way of calling this particularly wave 1. It is more or less like what we were trying to look at on the other chart, where we weren't able to we had to do like a running flat. Wave 1, A, B and C, for example. So it's possible, it may be possible that if we say this one here is a 1, and then this one becomes 2, so that one there is wave A. So we got A, B and C appears, the 1 and 2, right? So so this becomes 1, this becomes 2, and then we got 1, 2, 3, 4 and 5. Okay, so right, so what we will be looking for then is possibly, and also let me check the RSI to see if it harmonizes. Yeah, it does. It does. Okay, so what we've got is this one could be wave 3, and then this one here is possibly wave 4, So we go wave 1, wave 2, wave 3, this one here is 4, and then this one coming down would be 5. So that would complete this wave A. So then we've got coming back up here, possibly coming back up there as some sort of wave B. Wave B. So we'll probably have something like A, B and C to give us wave B. So wave A, wave B, and in that case we're expecting a lot lower prices. If that's the case, then we're expecting at least something like that, quite possibly another leg lower like that. So if at the moment we're just working out with this to see if that in fact is the case. If we do that and then we do AB equals CD, then we're looking for coming much lower. Okay, so if we did that, and if we didn't do that and we simply said that this first one was A, B and C, and then again we had A, B and C, so wave A, wave B and wave C. Well, either way it would appear like we still have quite a bit of downside. So if we did the way I've got it now, then we got 1, 2, 3, 4 and 5, and it does harmonize with the RSI with the appropriate divergence. So that is possible, and in which case we've got that 5 waves to make a wave A, wave B over here, and then wave C down over here. Okay, now if that's not the case, then what we could have is a triple zigzag, and in triple zigzag what happens is you get A, B and C. So that's one zigzag. So you get larger A, larger B, and then you get A, B and C. So that becomes your second zigzag. Okay, so both of those possibilities are counting, suggest that the OZ will weaken. So initially we are looking for OZ to fall and at least retest this low here, this previous low, low and low, all at that kind of level. So we're expecting OZ to probably drop in the region of 1.018, or if we round that up to say 1.02, which will be a little bit higher than that, 1.02. Okay, initially that's what we're expecting. But the other point to bear in mind is when you consider the whole of this was wave A, right? Then small a, b, c back here as a wave B, and then all of this looks like a triangle. So you got A, B and C, and in which case we could come all the way down here. So you can see that if we were treating this part as a wave A, B and C, then this green 1-to-1 ratio brings us to 1.003. So if you call it parity almost. So and then that harmonizes with 61% retracement of the entire amount. So I think Aussie dollar has a lot more to lose. We'll be expecting Aussie dollar to probably drop to this sort of level before Aussie dollar begins to start running. So Aussie dollar will be weak for a while. So the minimum is 1.02, or possibly even deeper to somewhere in the region of almost like parity. Okay, so that's this area is the first one, and then this area here is possibly the second possibility. So initially we are expecting that to weaken, and we will assess then what kind of price action we get to see whether it's actually going to be a support in that area 1.02, or is it going to go down deeper. So Aussie dollar suggests weakness. New Zealand dollar you can see today appear to have a reversal bar. So we made a high yesterday on a blue bullish bar, and then today we didn't say it's engulfed, but it's actually it definitely is a reversal bar. we've closed well below the low of yesterday, and the high of today was lower than the yesterday's high. So in essence, we've got like a lower high, lower low. If you look at the 4 hour, then it looks like this. On the 4 hour, we made a high yesterday, then we dropped down, we went up, and we started tracking lower low, lower high. So I think a New Zealand dollar has probably topped, and therefore New Zealand dollar will be also looking for weakening. And in terms of the count, it has been very, very difficult in terms of the count, and I am in several possible scenarios, but I think the one that I will probably favor most is that from here I was counting. Now we've got 1 and 2, 3, 4 and 5 to give me 1 in a bracket, 2 in a bracket, 3 in a bracket, 4 in a bracket, and 5 in a bracket. So that gives me like a bullish wedge, not a bullish wedge, but what I call rising wedge. So rising wedge would give me either 1 or an A. So if I was to actually say that this is not a 1 but is more like a wave A in bracket, then this could be wave B and this could be wave C. Okay, so if you just bear with me now, if we say this one is wave B in bracket, then we've got A, B and C, in which case we can expect that to top. So this one becomes a wave C. Okay, so in which case that is a wave C. So if that is a wave C, then A, wave A, and then we've got, so this, if that is wave C, then this one is A, then this is A, B and C. So in that case it could be like an expanding flat. So we've got larger degree 1 A here, larger degree B here, and then this becomes A, and this is A. So A, B and C, with A, then A, B and C. So with A, B and C. Okay, this is what I'm thinking. So what we've got is this here is a B, and then this one is a C. So all of this, so this is what I'm thinking now, is we got this as a wave B, and then counting it up there, we got main leg up wave A, then we got A, B and C. So that becomes like that. So let me now put lines on. So here we have this one, then we have this one, and then we have that one. Okay, so what that suggests is we had a wave A in bracket, wave B in bracket, and then this becoming wave C in bracket by saying A, B and C. So if that's the case, then that would also harmonize with the fact that the Aussie dollar is proving to be weak, and New Zealand dollar has also topped. And if the New Zealand dollar has topped, which has been fairly strong recently, then that would also help us with the trade that we are stoking on the pound New Zealand or pound Aussie, because pound Aussie will start weakening and pound New Zealand has topped. So we will be expecting a substantial fall. That substantial fall, let me revise some of these Fibonacci's now. So basically that substantial fall is if we were to say 0 degrees, where are they? Okay, so if I was to say that we have a retracement to there, then 23% would only come into this area and 38% would come back to this previous low area. Okay, so considering what the Aussie is doing, I think it would be reasonable for New Zealand dollar to drop from there to here, at least from there to this 38%, and we will see then what happens at that level. Okay, let me just confirm. So you can see, for example, over here on the RSI, on the price went higher high, and on RSI we made a lower high, and today's action has suggested that we are on the RSI topping, and by the time that index drops, we would expect RSI at least to come and drop on there. If it's going to go and support at this level, remember it won't come straight down. So that's the other thing to remember. Although I put a line straight there, maybe what it might do is more like this. It's probably going to go from there, come into this area where previously was resistance, could become support, and then possibly have two legs like that. So in that process, what we might see the RSI doing is RSI is likely to drop down with this leg down, then the price will go back up, and RSI will then drop there, and it will get into some kind of a triangle. Now if you get that, then it's possible that we may form a low here, and then the price will revert to the upside on completion. Otherwise, we'll expect price to drop a lot lower, and then RSI to break below this trend line, and then the prices are likely to come a lot lower, like 61.8% retracement. So at the moment the bias on the New Zealand dollar will be to the downside. If anybody were able to enter in here, we are talking about nearly 100, 110, 120 pips. And thing with all of these is now we can possibly consider shorting this. Okay, because look, this minor trend line is also broken, so we can consider shorting this. But the thing is, we can't just short it right there. Well, we can, providing the position size is such that it's only say approximately 1% of our account, and we have 100 pip up there, just over 100 pip. So we have to keep that in mind, that if we get stopped out, we're going to be losing 100 pip. Okay, the other way of doing it would be, is you can see here we got wave 1 down, wave 2 up, currently in wave 3. So in real price term on this hourly chart, what we might get is either a low formed, or we might get still a small drop, then we'll get another pullback, and then we'll get another leg lower. Okay, so that would, then you can see is wave 1, 2, 3, 4 and 5. So once that 5 is finished, we are then going to be seeing a retracement. So the retracement could be something like A, B and C, like that. Okay, so it could come back to 38% retracement, which is over here. Let me take off one of the line on here. So we could expect 38% retracement, which comes in at this level at 84.5, right? Or it could go for 50% retracement, which is around 84.7. So 84.5 to 84.7, or it could even come all the way to here, 61.8%. So somewhere in there is where the retracement is likely to be. So that would be the potential area for short, because we will have few things confirmed for it. One is we got clear 1, 2, 3, 4 and 5 wave down, and if it's a 5 wave down, then we expect ABC retracement. And then once we got ABC retracement, we have ABC pattern, we have retracement fib line, and we may be able to also possibly put some kind of a minor trend line like that. Okay, so those are the kind of things we can start looking for when the price gets there. I know we haven't got the price in there yet, but when we get there, that's what we will be looking to do. So what will then happen is, you know, price, you get A, B and C, and by the time the C comes, we come back to the top end of this rising minor trend channel, and we'll get a Fibonacci retracement coming in at that level. And then also at that level, we'll be looking for appropriate RSI divergence to show us, to say that the upward momentum is dying and the market will be then looking to come down. Okay, so that's basically what we will be looking for potential short. So then we might perhaps be able to enter a short around 84.7 or 84.8, and then our overall stop loss would be something in the region of 60, 70 or 80 pips. So that would be much more manageable, and it will be safer, because if this is 1, this is 2, then the next one will be strong. If this is A and this is B, then also wave C will be reasonably strong. Okay, so New Zealand dollar is a potential short, and likewise Aussie dollar is also a short. The yen, I think, has already topped, as I tried to explain to you yesterday, and what I'm seeing at the moment is, I think this top here is where the real top actually finished. Then since then you can see we had A, B and C, or possibly 1, 2, it looks more like A, B and C. You got A, B and C, and in a wave C you got A, B, C down, right? So I think that's an ABC zigzag. Then we went up A, B and C, and then we've come down in A, B and C. Okay, so we're getting lots of A, B and C's. So let me just clarify that. So here, this is on hourly chart now. So from there to here, we have wave A, B and C. But then going back up is not clearly 5 wave up. Although it made a higher high, it's not a 5 wave up. So I think what that one is doing is that it's got 1 and 2, and then this one is C, 1, 2, 3, 4 and 5. So wave C, so ABC. So we have ABC down, ABC up. So it's an expanding. Okay, then we should be coming down in a 5 wave, because in an expanding flat or in a flat, we get ABC for wave A, we get ABC for wave B, then for wave C we should get 5 wave to the downside. Okay, so let me just see how we are faring with that. Okay, so if this is a 5 wave down, then let me see how it is actually going to make up 5 waves. So from starting from here, we probably got 1 and 2. We could say this is 3, 4 and 5, but it's possible. But you see this one here with the momentum high, we should have a divergence there. So I think it's not really finished. I think we've got something else going on here. I think what we have, if this is the highest momentum, that should be wave 3 in highest momentum. So in this highest momentum, I think what we got is you got 1, 2, 3, 4 and 5. So either A or, well, this should be 5 waves. So this is 1. Then we've got 2, we've got 3, but this one's gone well above. So I think what we've got is a strange looking wave. I think what we got is possibly that, and here we got that. Okay, so what I'm suggesting there is that we've got this here as a wave 1, because we've got 1, 2, 3, 4 and 5 to give us wave 1. Then we've got wave A, then we got this here as a wave B, and what that wave B does is we got A, B and C. You see 3 waves. Okay, so we got A, B and C as a 3 wave, so we got B, and then we got 5 wave to the upside. So we got 1, 2, no, ABC. Okay, so we've got wave A, B, C down here to wave B, and then you got A, B, C going back up to wave C. So this one is C, and because that one is a C, what it does now is make that one wave 2. So on a Monday we should see this one start selling off into wave 3, and if that becomes a 3, then this one probably will be like here, wave 3. I don't know exactly where the dimension will be. We'll get wave 4 and we'll get wave 5, and based on the Fibonacci of the entire rise, which is wave 3, we should get something like 38% retracement. So that would bring us almost up to about 88. And also they say that on the correction it comes down to the last wave 4 of a lower degree. So in the lower degree we had a wave 4 here, and then this was the wave 5. So if this one is coming down, it's possible it could come all the way to 88 area, but if it is very strong it might not come there. It might only do 23% retracement, and 23% retracement will bring us to this area here where previously was resistance, came down, broke above it, coming back to retest that area. So that would be like about 90. So I think I'm initially targeting US dollar yen to 90 area, and in the manner that I've just described, 1, 2, 3, 4 and 5. So we're going to get, in terms of price action, something like this. Something like that. Okay, now also many people will be looking at this as a potential head and shoulder, because they'll be saying this one is a left shoulder, this one is a head, and this is now becoming a right shoulder. So if that's a right shoulder, then we should be coming down, and in that manner we would get potentially height of the head. Once it's broken, repeats, let me see that one there, it will repeat on the lower end here. So that lower end, you do it from here. So that one is currently projecting a little bit lower than the 23%. So I think 90 is a reasonable target to go for, but it most likely will come to maybe like this one here at about 88. So 90 to 88. We won't know for sure. I know it's a fairly big target, but once we get some few more waves on here, we might be able to then perhaps better target this area. Okay, so at the moment I'm looking at 90 area, which is approximately where we got this head and shoulder pattern coming in, and it's also previously resistance, could now be possibly acting as a support. So most of the yen pairs probably will be showing something similar, with exception of something like a pound, which is actually showing quite a deep retracement. So what might happen now with the pound is it might do a small retracement and then it will do another leg. So pound will be doing this. Pound's already done something like that. So pound will be retracing possibly, and then pound will be making a second leg lower, whereas these ones in the same way will be now making lower low, lower high. So if you were looking to short, then the US dollar yen is actually short right now almost. I know market is closed, but you know, you need to short this one somewhere in the vicinity of 93.50 area, which is approximately where the price is now. Price is just below that. So if you did that, then your stop just goes above that. So actually you got like 50 pip potential stop loss, right? And you are not expecting market to go back and take you out, because based on this wave count, it should not do that. You should really start coming down. And if you look at it on a smaller time frame, then you can see that after this top, we have already done 5 wave down. We've gone 1, 2, 3, 4 and 5 wave down, and we have already come back wave A, wave B. So maybe you might get a chance, and we'll be fortunate that this one comes back up. So if you put a small Fibonacci on here, then in essence you are going to get this one coming back. So really you might get a chance to enter somewhere about 93.60 area, 93.60, or even a little bit deeper like 93.65, 93.70, and the deeper the better. But otherwise 93.60 area I think is reasonable to enter short, and then your stop is only about 30 pip. That I think would be an excellent short, really would be excellent short. If you're wrong for 30 pip, and providing you keep your position size such that you don't suffer massive loss on a 30 pip, you know, against you, then this one should be going down. Okay, the alternative way of making sure that you don't get caught on wrong side would be this one. This is the last low here. So if the market falls below that, then you know it's now in a correct trend. So you put in a stop sell order around 93.30 area, meaning that if the market comes that far, then it is continuing in the area that you want, and then your stop will go above wherever that next. So be this high, then we produce another lower high. So wherever that lower high is, you put your stop there. Okay, and you get and you know, you might finish up even then about 40 or 50 pip. So I think this is the interesting, and you know, when that is going to happen, I think, remember on the dollar index, we suggest the dollar index is going to go a small pullback, and then it's going to do a final leg up. I think this is excellent, because in this one we are expecting a small pullback and then a leg up. So when the dollar index makes a leg up, because the US yen is a part of a dollar index, is about 10%. So when the dollar index does a small drop here, we might do a small drop, and then when dollar index does another high, this one will go back up. Okay, now remember, it might even do a deeper retracement, like 78.6%. Sorry, this one is 0.786, and then over here is 78.6. Okay, so if for example dollar index does another high, then it will appreciate against yen also, and it will come to somewhere in this area here. So maybe you should get an entry in that range. So the higher the better, because there is less risk associated. And also the other thing is, see, this sell-off that we had is quite strong compared with what we're expecting going back up. When we're going back up, it will be more like this one here, in contrast to this kind of sell-off. Because if this is impulsive, we've already had a wave A up. You can see we've already had a wave A up. We are currently in the process of forming a wave B, and then when wave B is finished, we'll do a wave C. So it will not be as strong as this down leg. Okay, so on that basis, I have spoken to few, and they were looking to short, but unfortunately they think they are scared of shorting, and I do appreciate that. But I think this is an excellent short. because if you put that fib on, you'll be coming in the right area, and we should be really looking for a strong sell to the downside, like that. So wave one already done. So if this wave 3, you can imagine that wave 3 will be strong, because most wave 3, relatively speaking, are strong, and it would happen. And the other point to note is, whilst we don't take into account a lot of news events, but remember, a lot of the major tops or major bottoms are at roundabout major news events. So for example, recently, remember when last week or early this week, I think there was a Japanese finance minister. He was saying that they are not really trying to weaken the yen, they are trying to stimulate the economy and also fight the deflation. So they want to bring in some inflation. So in process of that, the byproduct is that the yen becomes weaker. And he said he thinks the yen has weakened too quickly. He didn't say too far. He said it has weakened too quickly. And round about that, our wave counts are correct. Our several other technical analyses, our what you call the divergences on RSI, fib confluences, everything suggests that we have possible intermediate top, not an absolute top, but intermediate top. So if there is an intermediate top here, and that came around about the time when they were saying that they feel the yuan has appreciated too quickly, which suggests that intermediate top could be in. Okay, so from that perspective, everything to me looks like is set up for a short, and the short can be quite reasonable in the sense of not just coming back by 100 or 200 pip, because remember, overall what we will be correcting is, we'll be correcting an entire leg from here. This entire leg has gone up without any breathing space even. So we are going to be coming back down in some kind of a proportion. And the other thing is that it has taken all the way up to here 113 days. So we're going to be correcting that by some reasonable time period. 113 days correction can't be in just 4 or 5 days. Not possible. So even if we assume that was the top, then so far on the daily chart, so far from here to here, we've only passed 7 or 8 days. So say 2 weeks maximum. That's all we got. 7 or 8 days. Maybe not even 2 weeks, but it's a little under 2 weeks. So now we will be expecting something in proportion to like quarter. So if it's 120, quarter will be about 40. So out of the 40, we've only got about 10 days gone. We've got another 30. So we should be expecting good 2-3 weeks maximum, minimum, maybe even 4 weeks of decline. That's what I'm expecting. And then it would be an interesting short position to go. But remember, manage your money. Don't enter in blindly. Use your stops and use your correct position sizing. Because we'll be doing this as a counter trend according to this major trend, I would not be interested in adding and building position, because you might not get that opportunity. In here, the first strongest one is the first leg down. That will be the strongest one from current level, because that will be wave 3. Wave 3 can be quite strong. It could, I've put it here, but it could come even further down. So that will be the strongest one. After that, it will bounce back, and then we'll have a final leg down. So it may be less of a thing. The first trade, the most profitable one, will be the first drop. So I won't be adding position, but you simply enter, manage, and take your profit, and then get yourself ready. So when we get the bottom in this area, get yourself ready to go up. And the going up will be at least retaking the high and maybe making a new higher high. Okay, so that's yen. Let me go over the Canadian. Not a great deal to speak about Canadian. It's a little bit like a US dollar Swissy. However, here we can see we're going up in this minor trend channel, and it looks like we've done wave A here after having dropped that significantly with a September low. We've got a wave A in bracket, wave B in bracket, and we are going up. And I think we had a top here, but it looks like we haven't. So that top is going to be moving further down. So what this one is wave B in bracket, and then we would say this one is wave A, minor A. This one probably not finished, but it could be minor B, and we are working on minor C. So eventually I think by the time dollar tops, remember we are saying it's going to top next week. So if this one tops next week, this is daily, and the Canadian dollar remains weak, then for a little while dollar will continue higher against the Canadian dollar, and we could find that either we'll just trade sideways and maybe top out somewhere about 1.01, or maybe go up to 1.02 area, where I've got this triangle, we got this upper parallel of the declining red pitchfork. So we're going to be going into that kind of an area, and in terms of the overall drop, we'll be looking for 61.8% retracement. That would target everything. That would mean that we'll be ready for Canadian dollar to be shorted. Not Canadian dollar, I mean US dollar to be shorted by shorting the US dollar Canadian pair, and we'll be going for the next leg down. I think next week is going to be very eventful week for dollar. I can see it. Even if we don't get a top on a Monday and we get a lot of sideways choppy move next week, even if we get that, next week I think is going to be a week when the dollar index will top out in the current area or a little bit higher. We noted with the dollar Swissy that we are expecting further upside. We noted also with the dollar Canada we got a further upside, and on the dollar index we are expecting a further upside. So if it doesn't top on a Monday, then I think it will be topping later on in the week. But my initial preference is that it tops on a Monday, and then some currencies like CAD, which is weaker, has been weaker, will probably continue a bit further up and might top out toward the back end of the week. But the dollar index itself, I think, will probably top out at the first part of the week. Now the biggest one we are stoking is this pound. I was going to show you something else on this is the pound futures contract, and it's on a daily chart. Okay, see this today. It's very interesting position actually. Let me show you. Okay, now recently when pound has been dropping, and I pointed this out in the videos earlier, pound has been dropping, and see this massive volume today, and look what happened. We tried to come lower, but price actually closed above yesterday's close. That suggests to me that there is a lot of smart money buying into the pound, right? A lot of the smart money is buying into the pound, and I think the pound has bottomed today. I don't think we might even on a Monday try to drop below. That is possible, because remember US market will be closed, so most of the market that will be active, it will be the European and UK market. So in that process we might even try. Today's bar is actually like a engulfing bar. If you only look at the entire high and a low of the day, then today's bar is an engulfing bar on the futures contract, and look at the volume on today's bar is even higher than the previous bars dropping. So I think there's a lot of things have happened today, and I think the pound dollar has put a bottom in. If it's not, then next week on a Monday we will try to test the bottom, and we will refuse to go down any further, and we'll close up. Okay, so that's one. This is the official commitment of traders report. Now last week, remember I suggested, or when we looked at this, we said that the short position increased by 25% to 30% from the previous week. Well, this figure is based on last Tuesday just gone of this week, because unfortunately they released the detail on a Friday, but these details are as it is on Tuesday. Okay, so for example here 12th of February, that's when the positions were. So on 12th of February they're saying that these non-commercial, so they are like big speculators and hedge funds and fund managers and people like them. Commercials are like banks and institutions like that. Okay, so institutions, broadly speaking, they are net long. Their shorts are small, they're net long. And in fact, here you can see they actually increased their net long position by 16,000 contract. So now it is at 109. Previously it was less than 100,000. You take 16,000 away from there, then that would have been something like 95,000 or so. Okay, but now they've increased their long position. And the shorts last week, they were 76,000 plus 173 on the top. So they were 76,000 plus 200, so they were closer to 76,700. But they've actually reduced the short by 107. So this is the commercial. Commercials are heading toward which way the pound is going. But these speculators, large speculators, look what they've done. The net long position, they've reduced it by 13,000 contract. So last week, this position here would have been like a 50,000 contract. They've reduced that by 13,000. So from 15 to 13, that's almost like a third. They've reduced that position long position reduced by 30%. And look at the short. The short, they've actually increased. So from 55 this Tuesday, they've increased it by 4,600. So if you take that away, last week it was about 51,000. So currently they've increased it by 4,600. So it's reading there as 55,500. So that's a large speculators. And then look at the short position of the small speculators. Small speculators increase their long position also. So that's interesting. And the short position, they have reduced. So it looks like this time around, small retail, non-reportable, maybe somebody might be clever money in there. Hey, they've actually correct. They're following the commercial. They've reduced their short and they've increased their long. So this time round, they're probably right on the money. But this non-commercial, they're obviously betting the wrong way, right? So I'm just saying, based on this futures chart, to me, I think the bottom is in. And see, on the MACD we have a divergence, negative, the positive divergence, because on the histogram I'm talking about. And next week what we'll see, if this plays out, then this will curl up, right? So that's one thing we're going to look at. And the other one we were going to look at is the the general chart on the pound. Yesterday we were looking at a bottom in that area. It's a 78% retracement of this entire rise. We have Fibonacci projection from this leg here, which comes into that area. We have RSI on daily showing divergence. Okay, so that's interesting. And then over here, in terms of the wave count, because remember we were saying that this is the flat correction, so ABC in wave A, ABC in wave B, so we want 5 wave down. So looking at the 5 wave, we've got wave 1, wave 2, wave 3, and this wave 4 is a little strange looking wave, so I put it in a green here. So wave 3, then you go A, B and C, wave 4, and this is wave 5. So within this wave 5, if I now drop down, we've got 1, 2, 3, 4, 5, so that gives us wave 1. ABC back up to wave 2. Then this drop here is wave 3. This one here is wave 4. And this last drop is a wave 5. And so what are we doing now? I think we've already bottomed and we have started in a new trend, right? And the new trend, you can see we got wave 1, wave 2, this is wave 3, this is wave 4. So what we'll see on a Monday is a wave 5, then we'll get a pullback. So if you want to get long, then wait for this first up thrust, then expect a pullback either on a Monday or a Tuesday. So really speaking, because you'll be able to put a Fibonacci on there as well, and this will be the first wave up. So if you put a Fibonacci on and you look at the structure, I think you should be able to get long in the vicinity of 155. And then your stop would be about 50 pip away. and that 50 pip away should never be reached. It should never target that, because we've got the bottom. So we should be going up. So if this is the wave 1 done, so Monday for example, if we get this leg up, then we get a retracement on a Tuesday or something, or everything might happen on a Monday. Then Monday would be the entry at 155, and then wave 3 will start, and that wave 3 will be quite strong in comparison to what we've had here so far. And then also, if you look at it overall, what you'll get is inverted head and shoulder. See, you've got a left shoulder, this will become head. If this one comes down and then it begin to rally up, you'll see it becomes a shoulder. Okay, so this is the big position. It's a trade that I've been stalking for last 2 weeks, and I've explained in great details, and I've analyzed this in the way that I think like my life depends on it, and I am pretty convinced. Now that doesn't mean anybody should put in everything they've got. You should still always use correct position sizing, and this is the big long trade. So unlike the Aussie dollar and unlike the yen, this one I'm expecting an absolute minimum at least to come back to the high, absolute minimum, but it won't do that straight away. It's going to do in a 5-way, because this will be strong 5-way up. So for example, if I just sketch it out freehand, wave 1 here, come back to test this one here, wave 2 down, you know, something like this, wave 3 for example, and then we'll get wave 4, wave 5. So that will have completed one sequence of 5 waves. By that time we'll be coming to the previous high. We'll get another pullback like so, you know, like 38% or 50%, and then we'll be looking to go up again. So really speaking, if you just figure this in your mind, then we'll have this one to get long in, and by then you'll be looking at nearly 300 or so pips locked in. Okay, so break even plus some money locked in, you get a retracement back, then you'll be able to bring your stop to here, wherever that is. We'll bring the stop to here, and same time you'll be able to add another position, because if this one was 1% of your account size, for example, whatever that is, so 1%, you come back down, and when it comes here, you bring your stop right up here. First, the moment you get about 100, 120 pip, you bring it to break even, and maybe about 10 or 15 pip locked in. So then, you know, you can forget about any worries. It goes up, completes its 5-wave, minor 5 waves, then does a pullback. When it does a pullback, at that stage, we'll be able to bring stop loss to just below that low once we know the low is in, and we'll be looking to add another position. So the risk will be only on the next one. Next one will have only 1% risk. Then it goes up there like that, and along the way you'll be able to get minor 5 waves. So give you an illustration so you understand fully how I'm expecting things might develop. So wave 1, wave 2, wave 3, wave 4, and wave 5 for example, right? And in doing that, it will have completed this cycle here, wave 3. So along the way you'll be able to say goes up, you'll be able to bring your stop to here, maybe add another position, because by then the second position we should be able to lock in with some profit. Okay, then it goes up there, so along there you got 2 positions running, and a third one will be becoming into profit. Goes up to here, comes back down, so you got 3 positions locked in with a profit, and you're going up there for 4th one. And then when you know that you're going up to there, then after that you'll be getting quite a bit of retracement. So you might be able to say, okay, I'll take 1 or 2 positions off, let it retrace, and when it comes back here, then you bring everything up to here and add those positions back on. So that's the process I suggest you follow, and we should be able to have really good profitable trade on this particular currency pair, but more importantly on the pound Canada, or better still pound Aussie and pound New Zealand, because pound Aussie, remember we said against the US dollar we're expecting New Zealand dollar to weaken, we're expecting Aussie dollar to weaken against the US dollar, and if the pound is going strong against the US dollar, that means it will be really rocketing against the Aussie and against the New Zealand. Right now I won't go into those charts today, because on a Monday we'll be going through pound currency charts, but in general term, if I just quickly point them out, you should be looking to get long either on a pound on a Monday, or you should be looking to get long on pound Aussie or pound New Zealand on a Monday. Where am I? Pound. And then I will finish this here. For some reason I seem to be going extensively really long videos. I don't mind as long as you don't mind, but I am wary that you might not want such a long videos. I'll have to watch my time very, very closely. Okay, so the pound New Zealand, for example, has come all the way down here. Previous low was at this level, so everybody will be looking to short their life out of this particular pair. But I think also we have a bottom in here, and even if we don't have the bottom in here, what we might find is we might come back and retest the bottom and then start the long way up. But I think also in this currency pair the bottom is already in here, and what we've got so far, if you look at it in a shorter time frame, something like this, then maybe here what we got is wave 1, wave 2, this is wave 3, we'll get a small retracement wave 4, and we'll get a retracement of wave 5, which is exactly the same thing we've seen with the pound dollar, right? So once we see this wave 3 done, we get a small retracement and we'll get another leg up, so that will complete these 5 waves, and then we should be able to get a retracement back down. So you should be able to get long somewhere in this area, 182.50 area, 182.60 area, somewhere in that area we should be able to get long. And at that time, this currency pair, when it moves, it really moves, so it's a beast in a sense. You get it wrong, but the maximum risk is about 120 pip, possibly 100 to 120 pip possibly is when we get time to get in. So that's what I'll be explaining if it not happened already on a Monday. But otherwise, that's what you should be looking at, and just take one particular trade or one particular pair of a pound. Don't trade pound everything. Just trade pound Aussie or pound New Zealand. And pound Aussie has come into brilliant area because it has definitely put a bottom in, and you should be able to enter in the same way with a stop just below the bottom here, and possibly with less of a risk. So from that perspective, pound Aussie is the best pair if you want to trade the pound strength. New Zealand dollar is still a bit stronger than the Aussie dollar, so in that comparison the pound Aussie will probably be the best, and it's got a structure, it's got Fibonacci, everything lining up, and it's making higher high and higher low, unlike the other one. But the other one I think will probably start rocketing because a lot of the people will be caught on the wrong side. So that is all from me. That is all from me, and I appreciate your joining me, and those who are on the not able to join me but are relying on the recording. I hope you find this interesting. I do apologize for the rather lengthy videos, but I think I'm adding some content, I'm adding some real details in there, and in particular the big trades I'm looking for is a pound. I want to make a lot of money on that one, because just like the Euro Aussie and Euro New Zealand, that's some of the trade we are in, I think the pound is going to give us similar kind of a trade, and we want to try and increase the range of currencies without duplicating them, so they're not all correlated. Okay, and I really want to focus, and I hope I can help you also focus on these big swings, and then you'll close your eyes to intraday swings, even though they look very enticing, even though you might think, oh, I could have made a lot of money on this pair, but intraday is very difficult, very, very difficult. I mean, for example, for gold, for quite some time, my views, I've been saying it's going to come and test 1500. Well, we are now reaching close to that. We're only about just over $100 short of that. But trading that intraday is so hard. But if you trade this as a position trade, you can relax, you can have a position that you can tolerate, and it's going to get there. In between is of no real matter to you at all. So that's what I'm looking to do. I mean, when we get into trade, something like this one here, I mean, just imagine being in a very small position and you do this kind of a move on a small position. It is much better than being chopped about and, in and out and worrying about what's going to happen. And, somebody makes an announcement and suddenly you get 100 and 120 pip one way. It's really, really hard to trade that. I don't think anybody can really successfully trade profitably and make money. And if they do, it will be very, very stressful. I find that very stressful. So if you focus on this other area, bigger picture, and then even with a relatively small position, you can still score really good money. So that's what I'm expecting to do. And similarly, just one final comment is I've been trying to feature this option trade. Well, see what happened. This is the gold, GLD gold. Okay, now I've only put these positions on a limit entry basis, and I put this one on Tuesday, but it actually got filled. It got filled. When did it get filled? Let me see. Gold got filled on 13th. So 13th was, I think, Wednesday. It got filled on Wednesday. Okay, I didn't take this trade earlier, but now I'm really getting strong feeling that about getting this option thing going, because I think really a lot of money could be made without risking a lot of money. So just to illustrate, this is the gold, and it entered at $2.20 each. Right, so you have to buy one contract. One contract in a US dollar option business is 100 share on a GLD. So 100 share. So I have, on this demo paper trading account, I have bought 5 contracts. So that's like 500 GLD shares. A put option on them, a put option for 145. Now I know at the moment we are around 1600, but in order to make sure I don't put a lot of money at risk, I've put on a contract which will last me up till September. So I've given myself plenty of time for my trade to mature, right? September. But I think we will probably be over by late June, maybe sometime in mid-July, okay, or maybe even sooner. But it'll until September, so I don't run out of time. Bought it at 220, and it triggered on 13th, and currently it's at 315. So when you look at my position, GLD bought it at 220, and it's currently at just over 3. So it's approximately $437 on total cost of $1,100. So that is so far almost like, not quite, I say third, at least third to be fair. Otherwise it's nearly half the money. Okay. Now, if for example over the next week or two we get a gold dropping further, and it will, there is no reason. Look, RSI is breaching the previous low and is going below 30, and the going below 30 is a bear territory. Look, if you look at here, the only time RSI went below 30 in this area here on a daily chart last time is here, below 30, and then it recovered. We've come to 30, but each time is, this is the highest high, and here we've never made beyond 60. So this is the bear territory. Once it falls below here, you can see what will happen on RSI. RSI over here fell below, didn't quite get to 30, just bumped on 30. You see, even in this serious sell-off, it only bumped on 30, bumped on 30, bumped on 30. This time round, I think we're going to go into serious bear territory, and you can imagine what that will do to the price. Based on the Fibonacci's here, Fibonacci time sequence, I've put in measured from here up to there as sorry, what have I done on the pound sequence? Okay, this is starting from the 2008 low. From 2008 low to here is 1 unit, and then the projection of Fibonacci, you can see this here is 127%, and it interestingly lines up with that. Then 138% lines up absolutely with this top, and then the 150% again lines up with the top. So I'm expecting my low will be long before this one here. 161%, that comes in May, 7th of May. But I think I will probably hit, if this one really start cracking down, I think we could probably hit this low here around about 1450 or 1500, probably by end of March, maybe in April. But it doesn't matter, we got plenty of time. But the point I'm making is this kind of big time analysis can easily be leveraged, because by then this particular option trade I'm talking about, only $1,000, I expect that one will probably be, these options I'll sell about at 220. I would not be surprised if they'll be worth about $5 to $6 each. So I will be more than doubling that, right? More than doubling that. It might even, I'll be fortunate if it gets to about 1480 or 1450. I will be making serious money with this. This $2 option will probably turn into like $6 or $7 option. So that'd be like 3 to 4 times my original capital in on that particular trade. How long? Probably a couple of months. Now imagine if you got a portfolio of different trades maturing in 2-3 months, and you're doubling and tripling your capital across the board without this kind of a risk of monitoring 15 minutes and 20 minutes and half an hour and 1 hour charts. So that's what I'm trying to encourage. You don't have to follow this if you don't want to. Obviously there's no compulsion at all, but I wish that some of you could. Oh, let me just show you, sorry, my real point of showing that, I forgot. The real point of showing that is this here. See this pound trade? I am looking to enter long position on a pound, and I'll probably get a chance to do that on a Monday. Currently this particular option I'm looking for is June. They're 164, that's a 1.64 call option for a June, and it's costing me 35 cents, or I want to buy it at 35 cents. Currently it's quoted at 45, so maybe it will drop and it will give me 35 fill. If it didn't, I'll be able to enter that in the market. So 45 or 50 cents I'll be able to enter. So if I get a 35, I bought 10 contracts, so that'll be like 1,000 shares, right? On 1,000 shares I'll be spending $350. If I get a fill at 50 cents, I'll have to pay $500. So between $350 to $500 is what I'm expecting to fill. If this, over the space between now and June, if this one gets anywhere around 61, 62, these options will be worth like $2.50. If it gets to 64, these options will be worth almost like $4. So you can imagine $4, that will be like 10 times my capital. So if I put in there 350, that will be worth $3,500 by the time, it could happen before June, but if not, probably by June. So this is what I'm trying to say, is that over a period you'll have several things without risking a lot of money, and still making the kind of money you could make on taking big risks on foreign currency trading FX. Because I have traded this for 12 months and I'm pretty good, but I think it's too risky and it's very stressful, and you almost feel like you're glued to the screen. So anyway, that's my personal feeling, but you'll have your own thoughts, and I would welcome your interaction with me. Send me the details on a like on a Skype or email. Give me some feedback so I know I'm not barking up at the wrong tree and targeting these things in a way that maybe you don't appreciate. So then I'll ignore. In the future I will try and exclude them. But if you really want to be profitable, then I think we need to try and leverage on my ability to analyze market on a long-term trades. That gold, for example, right from late December, I've been telling that it's going to retest 1500, right? So if we had entered a short position, having bought a very cheap put option over here, right around here, which was like middle of October. Just imagine middle of October, we could have those $220 option I'm buying now, you could have bought that for probably like about 40 cents or 50 cents. You'll be 4 or 5 times in the money by the time it gets there. there'll probably be 10 times the money. So $1,000 investment there would be worth about $10,000 by the time it gets there. It's taken 3-4 months. Yeah, but why worry? You see, this is the kind of thing where I think we should be focusing on, and look for something big, and let everybody else chase the tail in trying to look at this hour and 4 hour and 15 minutes chart. Personally, that's my personal view, and I have always said and classed trading those options will be the one which will be my life-changing and wealth-building exercise. And then looking at this chart, there'll be like a target practice. So in other words, you want to practice your targeting for getting your analysis right on a shorter term, because it happens quicker. But even then, I wouldn't go into 15 minutes. We will still be looking at daily, 4 hour and hourly chart at the most. But then my trades will be very, very small, and then they'll be just like a sample to not sample, but what you call like a, they'll be trading. They'll be basically a target practice. Nothing consequential. It'll be target practice. So they don't drain you out excessively. So anyway, that's enough of me. Let me end here. If there's no other questions, I'll stop the recording here.